welcome back to the Deep Dive. Today we're going to be tackling something really interesting.
Oh, yeah.
It's the connection between financial development and technological innovation.
That's a crucial one.
Oh, absolutely. And we've got a fantastic article here that's going to lay the groundwork.
Yeah, right.
It's from the Journal of Money, Credit, and Banking.
Okay.
It's titled Technology and Financial Development.
Oh, I love that article. It's a good one.
Yeah, it really sets the stage for this whole discussion.
Yeah, especially with how it defines technology and financial development.
Right, and it's interesting because they're not talking about technology in the way we normally do.
Not iPhones and all that.
Right, exactly. They're going deeper.
They're going right to the core of it, like the tangible factors.
Oh, yeah, the real nuts and bolts.
That determine how industries operate.
Yeah, so like
how much labor they use versus capital,
Okay.
or even the characteristics of the capital itself.
Oh, interesting.
Is it easy to move or sell?
Okay, so it's not just about the amount of money. No.
It's really about how businesses can actually get to it.
Yeah, exactly. It's all about how effective the financial institutions and systems are in getting those funds to where they need to be.
To where they're needed most, right? This makes me think about those industries that need a lot of money up front, or they just have a lot of risk involved.
Yeah, they call that external finance dependence.
Or EFD.
EFD, got it.
So if an industry really relies on that external financing, are they more sensitive to the level of financial development in their country?
That's a great question, and that's really what the research digs into.
Okay.
And it looks at all these different technological factors that influence how much external finance an industry needs.
Interesting. So what are some of those key tech factors?
Well, first, you got the classic capital versus labor intensity.
Right.
You might think that capital-intensive industries would just automatically need more financing because they're so reliant on equipment and machinery.
Yeah, I would think more equipment equals more money. Right. But it's not always so straightforward.
Why that?
Well, while they might need more investment throughout the process, they also have more to offer as collateral, which makes it easier to get loans.
Oh.
It's kind of a trade-off.
So it's not just about the amount of money or the capital that they need.
Right.
It's a type of capital they use.
Yes, exactly. Now, how easy is it to move those assets or sell them?
You mean like the fixity of capital?
That's right, the fixity of capital.
That's an interesting concept.
Yeah, fixed assets like buildings or machinery, they're easy to install, but they can also be used as collateral very effectively.
Especially in those.
Especially in less developed financial systems.
Okay, so having those fixed assets could actually be a good thing.
It can be a huge advantage.
When you're trying to get financing.
Absolutely. Now we got to consider how long that capital lasts.
The durability.
Yes. How quickly does it depreciate or become obsolete?
I mean, especially in industries like tech where everything changes so fast.
Oh, yeah. A piece of tech that's cutting edge today might be outdated in a year.
Total.
So if an industry has rapidly depreciating capital, they need cash infusions more frequently.
Yeah, that makes sense.
Which makes having access to external financing even more important.
Makes sense. Then there's this concept of lumpiness.
Oh, yeah. Lumpiness is a big one.
Lumpiness of investment.
Imagine these companies that have to make these huge investments.
Okay.
But they only do it every few years.
They're kind of at the mercy of that cycle.
Exactly. So they face these times when a lot of money's going out, but not much is coming in.
Right.
So external finance becomes absolutely essential.
It's like a lifeline.
It is a lifeline.
What about research and development?
R&D. That's a long game.
Yeah.
You're investing in the future.
Okay.
But it comes with huge upfront costs.
Makes sense.
High risk, and you don't even know what the returns will be.
So R&D intensive industries must be super reliant on outside funding.
It's like venturing into uncharted territory.
Yeah, you need someone to back your expedition.
Exactly.
And they know they might not find anything.
It's a gamble.
Absolutely. And then what about those industries that rely on highly skilled workers?
Yes, industries with high human capital intensity.
So where expertise is essential.
Exactly. They often have to invest heavily in training and development.
Okay.
Which means big upfront costs, especially if the individuals themselves can't afford to pay for it.
Right. So all of these factors could create a greater need for that external financing.
They can, and the researchers didn't just stop there.
They didn't.
No, they wanted to see how industry growth is affected by the relationship between those technological characteristics and a country's level of financial development.
So it's like you have to look at how those factors interact with each other.
Precisely.
Yeah.
They wanted to isolate the impact of those tech factors.
Okay, so how do they do that?
They took a differences in differences approach.
Interesting.
So they compared industries with different technological traits, but they looked at them in countries with different levels of financial development.
Oh, that's clever.
Right.
And I'm sure they used some pretty complex modeling to make sense of all of it.
They did. They built a whole statistical model to untangle these relationships.
Wow. Okay, so what did they find?
What did they find? Well, two technological factors stood out as being super important.
Okay.
R&D intensity and investment lumpiness.
Oh, so those are the industries that really benefit from.
Those are the ones that are super sensitive to the level of financial development.
In their countries.
Yes.
So these are the industries that thrive in financially developed countries.
It's like they're the high potential racehorses.
Yeah, but they need a lot of care.
High maintenance, for sure. A country with sophisticated financial markets is more likely to back industries that are risky,
Okay.
but that also have the potential to completely change the game.
That's so interesting. It makes you wonder how many groundbreaking ideas are out there,
Right.
just waiting for the right financial conditions to take off.
It's incredible, isn't it? It really highlights the power of financial development.
To unlock human potential.
Yes.
Absolutely. So we've talked about how R&D intensive and lumpy industries benefit from well-developed financial markets.
Yeah.
Can you give me an example to help me visualize that?
Sure. Let's look at the pharmaceutical industry.
Okay.
That's a classic example of an R&D intensive sector.
Yeah, for sure.
Developing new drugs is expensive and time-consuming, and there's no guarantee it'll work.
Definitely high stakes.
In countries with robust financial markets,
Okay.
pharmaceutical companies have options.
Right.
They can access venture capital, issue bonds,
Yeah.
or even go public to raise money for their research.
So they need all those different funding sources to be available.
They do. It wouldn't be possible in a country with an underdeveloped financial system.
Right, and that access to financing can literally determine whether life-saving drugs get developed.
It's that important.
Now, what about an industry with high investment lumpiness?
Let's take telecommunications companies. They often have to invest billions
Wow.
in infrastructure upgrades every few years.
Upgrading networks, laying new cables, it's a huge undertaking.
Exactly. And that requires access to large-scale financing,
Right.
which is much easier in countries with deep and liquid capital markets.
So it's not just the amount of money, it's how quickly they can access it.
It has to be available when those investment cycles hit.
This is all fascinating, but I'm wondering what it means for emerging economies.
Yeah.
Does this research suggest that developing countries should focus on financial development
It certainly seems to point in that direction.
to boost innovation and growth?
Yes. By creating strong financial systems
Okay.
that get capital to those R&D intensive and lumpy industries,
Right.
it creates a better environment for innovation.
But that seems like a delicate balance, right?
It is.
Because we're talking about industries with a lot of inherent risk.
Yes. How do you encourage innovation
Right.
without creating financial instability?
That's the million-dollar question.
It is. It's all about strong regulatory frameworks
Okay.
to mitigate the risk, but still encourage investment.
So you need those guardrails to avoid reckless lending and all of that.
Exactly. We need to find that sweet spot.
But how do policymakers find that balance?
It's a tough one.
What are the ingredients for a stable,
Right.
but also innovation-friendly system?
One crucial factor is transparency and accountability.
Oh, interesting. So making sure people can see
Yes.
how those institutions operate.
Yes, and that they are held responsible for their actions.
And that helps build trust in the system.
Exactly.
Right.
Which is crucial for attracting investment.
And especially when you're trying to get people to back those riskier ventures.
It makes a big difference.
Now, how does all of this impact a country's position on the global stage?
Oh, that's a great question.
Yeah.
If a country can create financial ecosystems that support innovation,
Okay.
they're more likely to have a competitive edge.
Oh, interesting.
They'll attract top talent, they'll drive technological advancement.
So it's a cycle.
It's a self-perpetuating cycle.
Innovation leads to investment, which leads to more innovation.
Exactly. And if you can't keep up, you risk falling behind.
That's a sobering thought. But it really highlights how important all of this is.
It's vital.
We've gone from defining these complex concepts to talking about global competitiveness.
It's been a journey.
This has been such an insightful deep dive so far.
I'm glad you're enjoying it. What has stood out to you the most from the research?
One thing that really struck me
Yeah.
was the emphasis on copyright protection
Oh, interesting.
for those R&D intensive industries.
Okay.
It made me think about intellectual property rights
Oh,
in a whole new way.
how so?
They're not just about protecting creators.
Yeah, right.
They're also about encouraging investment and innovation.
That's a great point. It's like a safety net for those venturing into the unknown.
Exactly.
Hmm.
It makes you wonder if countries that focus on strengthening those intellectual property rights
Right.
might see an increase in R&D investment and economic growth as a result.
That's a great point.
Yeah.
It shows how connected all these seemingly separate policy areas are.
They really are.
Financial development, intellectual property rights, and innovation.
It's all intertwined.
They work together to create the conditions for economic progress.
This has given me so much to think about. Before we move on, is there anything else from the research that jumped out at you?
Yeah, there was one finding that I found particularly interesting.
Okay.
It was about the importance of copyright protection
Oh, that stood out to me too.
for those R&D intensive industries.
Yeah, it's an aha moment.
It reinforces this idea that intellectual property rights aren't just about protecting the creators,
Right.
but they're also about incentivizing investment.
Right, because it assures investors that their investments in these new ideas are protected,
Exactly.
which makes them more willing to take those risks.
It's a key piece of the puzzle.
So it makes you wonder if countries that prioritize strengthening those intellectual property rights might see a boost in R&D investment.
It could lead to significant economic growth.
It really highlights how all of these areas are connected.
Financial development, intellectual property rights, and innovation.
It's all intertwined.
Absolutely. They work together to create the conditions for economic progress.
This has given me so much to think about. Before we go, any parting thoughts for our listeners?
One thing to keep in mind is that it's not just about how financial development supports innovation.
Okay.
Innovation can also drive financial development.
Well, that's interesting.
Think about all the new financial products and services.
Okay.
And even entire industries that are created because of innovation.
Like fintech.
Exactly. Fintech is a perfect example.
Yeah, it's fueled by technological advancements,
Right.
but it's also reshaping the whole financial landscape.
It's this amazing feedback loop.
It is.
So as you continue to explore all this, remember that relationship between innovation and financial development.
It's a two-way street.
Yes. They're partners in progress.
I love that Partners in Progress. It really highlights how dynamic all of this is.
It's not static.
It's constantly evolving.
Which brings up another question.
Okay.
What role does government policy play in all of this?
In fostering those financial ecosystems.
Exactly. We've seen how financial development can either help or hinder innovation.
Depending on how it's structured.
Right. It all goes back to finding that balance.
That sweet spot.
We need a system that provides access to capital,
Okay.
but without encouraging too much risk-taking.
Or stifling competition.
It's a tightrope walk for sure.
Are there any specific policies that could encourage that kind of balance?
There are a few levers that policymakers can pull.
Okay.
One thing that's often overlooked is financial literacy.
Interesting. Why is that so important?
Well, if entrepreneurs and investors don't understand how financial markets work
Okay.
or how to manage risk,
Right.
it creates a barrier to innovation.
It's like trying to navigate a maze without a map.
Exactly. Another important area is fostering competition in the financial sector.
Well-
When you have a diverse range of financial institutions,
Right.
you tend to see more innovative products and services.
Competition drives innovation.
It does. Think about it. When you have multiple companies competing for customers,
Yeah.
they have to come up with creative solutions.
And it probably helps keep costs down for borrowers too.
It usually does. You see lower interest rates and fees,
Okay.
which makes it easier for businesses to access funding.
Right. So promoting financial literacy
Right.
and fostering competition.
Yes.
Those are two key pillars
What's the third?
for an innovation-friendly financial ecosystem.
The third is investing in infrastructure.
Okay.
Things like research institutions, education systems, and high-speed internet.
So it's not just about the financial system.
No,
It's about the whole environment.
it's about creating fertile ground for new ideas.
I love that analogy.
Mm.
It makes so much sense.
If you provide the right conditions, innovation will happen.
It's all connected, isn't it?
It is.
Financial development, technological innovation, government policy.
It's all a part of the tapestry.
It really is. This has been so eye-opening.
I'm glad.
I'm starting to see the world in the new way.
That's great to hear.
But before we wrap up, is there anything else you'd like to share?
One thing that really resonated with me is this idea that innovation isn't just about new products. It's about new and better ways of doing things.
It's about challenging those assumptions.
Exactly. It's about constantly questioning and looking for ways to improve.
And that's important in every part of life.
It is. Whether you're running a business, leading a team, or just trying to improve yourself.
It's about having that growth mindset.
Yes. Believing that we can always learn and improve.
And that will help us solve the challenges we face.
Absolutely.
And create a brighter future.
I love that. So as we finish up this deep dive, any final thoughts?
Yeah, something for our listeners to ponder.
As you continue to learn about all of this, consider this.
Okay.
Could there be entirely new financial products or services out there just waiting to be discovered?
That could unlock even greater levels of innovation.
The possibilities are endless if we dare to imagine them.
I love that.
It's exciting, isn't it?
It is.
It
is. It's mind-blowing to think about all that potential out there, just waiting to be discovered.
Yeah. But it also makes you think about how we create the right conditions.
Right, to support those breakthroughs.
It all comes back to government policy.
Yeah, how those policies shape those financial ecosystems.
It's a complex issue for sure.
There's no magic bullet.
No, not at all. Policies that work in one country might not work in another.
So are there any general guidelines for policymakers?
To help foster innovation.
Yeah, exactly.
Absolutely. One area that's often overlooked is financial literacy.
Interesting. Why is financial literacy so important in this context?
Well, think about it. If entrepreneurs and investors don't understand how financial markets work or how to manage risk, it can really hold back innovation.
So it's not just about having access to money.
No.
It's knowing how to use it wisely.
Exactly.
Right.
It's like giving someone a powerful tool, but not teaching them how to use it safely.
That makes sense. What else can governments do to make a difference?
Another crucial element is competition.
Oh, interesting.
In the financial sector,
Okay.
when you have a variety of financial institutions,
Okay.
you tend to see more innovative products and services.
Competition drives innovation.
It does. Think about companies competing for customers.
Yeah.
They're going to come up with new ideas.
And it probably helps to lower costs for borrowers, too.
It usually does. You see lower interest rates and fees.
So businesses can get funding more easily.
Exactly.
So we've got financial literacy and competition
Yes, those are two important pillars.
of an innovation-friendly system.
What about the third?
What's the third?
The third is investing in infrastructure.
Okay.
Things like research institutions,
Okay.
education systems,
Uh-huh.
high-speed internet.
So it's about creating the right environment
It's about fertile ground.
for innovation to take root.
Exactly.
It's amazing how connected everything is.
It really is.
Financial development, technological innovation, government policy.
It's all part of a larger system.
This conversation has been so enlightening.
It's a complex topic.
It is. I'm seeing things in a new way.
That's what it's all about.
But before we move on,
Okay.
is there anything else you want to share with our listeners?
One thing that really stuck with me is this idea that innovation isn't just about creating new things.
Okay.
It's about finding new and better ways to do things.
It's challenging the status quo,
It is. It's about always questioning and looking for improvement
and that's important everywhere.
in all aspects of life.
Business leadership, personal growth,
It's about having a growth mindset.
believing that we can always get better.
Absolutely.
And that's how we'll solve the world's problems.
And create a better future.
Exactly. So as we conclude this deep dive,
Okay.
I want to leave you with a thought-provoking question.
Okay, I'm listening.
Could there be financial products and services out there that we haven't even imagined yet? Ones that could unlock even more innovation and growth?
It's an exciting possibility.
It really is.
The potential is limitless.
It really is exciting to think about what the future holds.
Yeah, there's so much potential out there just waiting to be unleashed.
And it all ties back to this relationship between financial development and technological innovation.
Oh, absolutely. Those two forces are going to be shaping our world for years to come,
So we need to understand how they work together.
and how we can use them to make a positive impact.
Well, this deep dive has definitely given me a much deeper appreciation for the complexity of all this.
Yeah, it's not simple.
We've covered a lot of ground.
We have, from defining these concepts to real-world examples.
And how they influence global competitiveness.
It's been quite a journey.
It has, and it's just the beginning.
As you learn more, you'll start to see things differently.
It's like opening a door to a whole new world.
It is. Before we step through that door, though,
Yeah.
is there anything else you'd like to share with our listeners?
Any final thoughts as we wrap up?
Yeah, as we wrap up this deep dive into financial development and technological innovation,
Okay.
I want to leave you with a few key takeaways.
Okay, I'm all ears.
First, remember that financial development and technological innovation are not separate things.
Okay.
They're intertwined, they influence each other.
They're partners in a dance?
Exactly. Understanding this connection is crucial for anyone who wants to understand economic growth.
It's about seeing the bigger picture.
Yes, the whole is greater than the sum of its parts.
What's the second takeaway?
Second, financial development isn't just about creating more financial institutions or pumping more money into the system.
Right.
It's about getting that capital to the right places.
To the places where it can drive innovation.
Right. The places that create long-term value.
It's not just about quantity.
No, it's about quality too.
What's the final takeaway?
Never underestimate human ingenuity.
Okay.
Innovation isn't just about new gadgets.
Right.
It's about finding better ways to do things.
Challenging the status quo.
Always questioning, always pushing the boundaries.
Having that growth mindset.
Yes. Believing that we can always do better.
And that's how we create progress.
Absolutely. So with that mindset,
Yeah.
I know you'll all continue to make incredible contributions to the world.
Keep learning, keep questioning, keep innovating.
The future is yours to shape.
This has been such an amazing deep dive. I feel like I've learned so much.
Me too. I'm so glad we had this conversation.
It's been a pleasure exploring these ideas with you.
Likewise. And to all our listeners out there,
Yeah.
keep exploring these topics.
Keep asking those questions.
You never know what you might discover.
And until next time,
Happy innovating!
happy innovating.